Hey guys, welcome back to the channel McNally Money, the official home of power mining analysis. Boy, how quickly things can change in the market. Extreme volatility over the last few days worth of trading. We didn't put out a podcast yesterday. The markets were in dismal shape, a sea of red. That's really continued into early trading today. We're going to be talking about this major sell-off we've seen in the Bitcoin mining stocks, what we're planning to do about it, and where we think these companies are headed next, in addition to some of the interesting financing levers we've seen deployed over the past few weeks. We've got a lot to talk about going into the weekend. Before we do, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If we're not already subscribed, McNally Money, feel free to join and let us know in the comment section below what you're doing in light of this sell-off, if you're adding, panicking, or holding, and your favorite pick in the sector. With that being said, let's get into today's video. All right, guys, Friday afternoon, we just wrapped up our weekly members only video. Luckily for us, we were taking some profits throughout the week here. Unfortunately, yesterday we saw a significant sell-off in the Bitcoin miners, hence the video thumbnail today. Now we're seeing an extension of that in early trading. Now we're recording this video about 2 hours after open. We could see some life back in the miners, but at this point, the last 48 hours worth of trading in the Bitcoin mining sector has been fairly dismal. Now that's a result of Bitcoin price. We've seen Bitcoin break through that 120 barrier, break through the 110 barrier. We actually saw it break down below the 105 barrier as low as 104,000 in early morning trading today.
Yeah, quite right. And this last few days has been, in terms of miner prices, has been really challenging to understand because, we were starting to see some decoupling of the Bitcoin miner prices with Bitcoin. Maybe those miners that were using their energy towards a HPC strategy was taking them away from that correlation. But this last 2 days has showed you just how the markets can react very, very quickly. And, we've just, like I say, on our own members channel, we've just explained our process and what we've been doing in the past week in regards to any purchases or any sales. And believe you me, there's been a big decline. A lot of people reached out to us and asked us, what they thought was happening there, and it's just this is what happens in this space. If you've been through a cycle before, this is nothing new, but the size of the drop in the Bitcoin price in the last week or so has been nothing more than extraordinary. We saw it drop 17,000 last Friday, then it recovered and it's come down this week as well, like you say, to 104,000. I don't know where it's going to finish today. We have seen a little bit of pullback in the miners. They were really red in pre-market. Every miner was literally double digits and high double digits as well. Even the likes of Bitfarms that has been really strong over the last period. Cypher Mining, we're talking 15-16% down in pre-market. They have started to recover now. They're still in the red, but they are recovering to a more reasonable price. And bear in mind, it's all been positive news for both of those companies in the last few months as things have come out in terms of the updates they've released regarding raising capital, potential clients, Cypher naming a client. It's difficult to understand when we have days like the last two we've seen.
Really got to chalk it up to volatility. This is the game we play, the big ups, the big downs. But I will say, if you were not taking profits over the last few weeks, maybe worth the $3 a month Canadian to join up in the miners member group and take a look at our strategy. Now, gold is also making a move here. Bitcoin, gold, a lot of times looked at as hard assets or the opposite of fiat currency. I was actually quite a gold bug prior to finding Bitcoin. It's been on quite a tear over the last 2 years as well. You can see essentially doubling and now surpassing $4,000 US per ounce.
Yeah, go back 2 years ago, around about $2,000, and I remember when I was even a child, and it was like $1,200 an ounce, and that was many, many, many years ago. So we didn't really see any massive increases, but that increase over the last 2 years has been spectacular for gold. Now, you put Bitcoin over the last 2 years against that, and Bitcoin's outperformed gold even in the last 2 years, even though it's shown over 100% for gold. Bitcoin's done better than that. You don't have to go back to the beginning of 2023, and Bitcoin prices around the $15,000 mark, and even say $104,000, it's higher. But if you're looking at time for time compared to this graph here, Bitcoin has outperformed gold. So I don't want all the people rushing out there and saying, we should be moving our selling our Bitcoin and go and join the gold rush, because they've both performed really, really well. And those people who've got, some of their assets in both, well done to you for picking two that have really performed, exceptionally well across other asset classes.
Most definitely. And I will say the benefit of gold is it's stood the test of time. Bitcoin has shown how great its technology is over the last 15, 16 years, but obviously gold has been around for thousands of years and a nice hedge in any portfolio. It's interesting, though, the behavior around some of these hard assets right now. So I've really been noticing on my X feed over the last few days this urgency and people around the world really looking to get their hands on gold bullion. So you can see this post from Jesse talking about locals in Singapore storming a gold and silver bullion shop to purchase some of this metal. We've also seen people on the Bitcoin side of things talking about previous cycles. This is a play they've seen before where the price of gold is run up. They see a lot of retail and general investors kind of flood into the gold space. Then they pull the switch, and that's when Bitcoin really takes off. So it's hard to decipher what exactly is going on here, but we are seeing a lot of people around the world really starting to second guess or consider where they want to store their wealth.
Yeah, absolutely. And we'll be monitoring this over the coming weeks to see if this is going to continue there. But as I say, if there's bad news out there about Bitcoin, we'd understand it, but I can't write anything at the moment. The investment banks are still buying it. The approved ETFs have been buying it, far more in excess of the 450 that's actually mined every day. So, whether some of the trading is an impact on Bitcoin price. Remember when the 19 billion wiped off last week, a lot of that was down to trading in Bitcoin. A lot of longs were liquidated in a very short space of time. I think it was within an hour. A significant amount was liquidated there. So we'll monitor it again over the next week on our podcast, and give you the up-to-date news that we have. Anything that's out there that may be having an impact on not just the Bitcoin price but also miner prices.
We certainly will. Yeah, I believe that the saying is correlation does not imply causation. But if you look at this chart, you can clearly see exactly that correlation over the last three cycles between the run up in the price of gold, the gold starting to sell off, and that really being the kickoff point for that parabolic or vertical move in Bitcoin. So again, time will tell. But we'll be here to keep you guys posted. Now, the next segment of today's podcast, now moving past that big sell-off, volatility, and profit taking, is really focused on financing. Now, this is related in the sense of timing. These mining companies, and really all companies in the public market, they have a number of different levers they can use. And we've talked about the importance of using these levers at the right time. So ATMs were a big source of productivity and growth last year. We've then seen convertible notes. We've seen debt issuance. So a great little segue here, talking about how these companies are really able to use these tools as they see fit at different times in the cycle.
Yeah, absolutely. And we did see miners use some of these types of debt back in 2021, 2022. And at that point in time, these secured notes were literally leveraged against Bitcoin mining machines. And what the market didn't tend to realize is that when the Bitcoin price dropped, as it did towards the end of 2021 and all the way through 2022, the price of mining machines, or the value of mining machines, dropped as well, and it caused problems for a number of miners. I remember Argo blockchain having about $40 million of these types of notes there. And they have an interest rate that you have to pay, and you have to pay that interest rate. And so in this particular instance here with TeraWulf, that $3.2 billion offering on notes that are due in 2030, so that's literally a 5-year period, they've got to pay 7.75% interest on those notes. Now, 7.75%, it sounds a lot, and it is a lot. It's $248 million per year. Now, Bryce, the question is, can this company afford to repay that back?
Well, I'm glad you brought that up, because you set the stage. The last cycle, we saw companies get involved with debt, sometimes get involved a little bit over their head. So the logical question here is, are they able to pay this interest? Is there any risk to the business? Now, you've found the slide from obviously this most recent announcement with FluidStack Google. It appears in this case, TeraWulf does have ample income to cover. I wanted to also talk about how the fact this has no impact of dilution on the company as well.
Absolutely. And this will be great for shareholders. This will just be another cost within the revenue that they generate there. So, that's if you just look at the one deal, the FluidStack deal, that's expected to generate $570 million a year of annual net operating income. Yes, net operating income is after all the costs. So, they've already paid out all their staffing costs, site costs, and everything like that. This is the net profit. So 248 million away from that still leaves them a significant amount, close to, just over $300 million of net income on this contract. Remember, they've got another contract with Core 42, not as big as this contract, but that'll be bringing in significant net profits as well. And one thing we don't know is, in the next 5 years, as TeraWulf start growing their power base in terms of the new site they've purchased, and also growing out Lake Mariner, there may be more deals on the table to go for there. So they've now gone out and borrowed all the capital requirement to deliver the 2 contracts that they have in place at the moment. And this puts them in a really, really strong position compared to a lot of their peer miners.
Yeah, it really gives them a lot of control. And you talk about that Cayuga site as well, also coming online, opening up further potential. So in summary here, in terms of a debt offering, the benefits, you don't have any dilution or risk of dilution. You've got full control. Now the financing element or risk is really out of this equation. However, on the downside, you really do need a formidable client like Google or FluidStack in the discussion to even get this amount of money. And then secondly, you've got to worry about the interest payments. So that's a great example. And again, hats off to TeraWulf for really executing on this vision. Again, we had the opportunity to go out with the team in New York there, and seems like they've got a great future ahead of them. The next example here, Bitfarms. So this one's a little bit different. Convertible notes. We've seen this used a lot this year by many of the miners. Another way to grow, there is some risk of dilution, but you don't have any of that interest payment or debt associated with this type of raise.
No, absolutely. And, they followed the likes of a number of the miners and gone, down the route of convertible debt. And again, not having to dilute shares is another option. I mean, Bitfarms do have, some Bitcoin on the balance sheet as well. That gives them another lever to pull. But with the fact that these miners are moving into high performance compute strategies, there are more levers available to them. So this is one lever now. And remember, only a week ago it was 300 million. Now they've upsized it to 500 million, and there's a potential for an additional 88 million in the next 13 days, should that option to take the additional amount be processed. Now, the unsecured notes will bear an interest rate of 1.375%. So this is much less than what these secured notes that Terrell have taken out there, and that's payable semi-annually, and that will mature at the moment on January the 15th, 2031. So again, another 6 years this year. Now, the convertible price of the shares is $6.86, which represents a 30% premium to the share price that was held on the exchange at the closing price of $5.28. And the company have said they may settle these shares in cash shares or a combination of both. Now, Bryce, again, Bitfarms are using some of their money, I believe, for a capped call. Can you just talk us through that, please?
I certainly can, yeah. And we mentioned the timing of these tools. So if you look at Bitfarm's share price today, it's at 485. So it was great they were able to execute this convertible, the conversion price and the cap price over the last few days before this big sell-off. But we just mentioned one of the downsides of a convertible note is the potential dilution. Obviously, shareholders don't like dilution. We know with TeraWulf, a large portion of shares are held by insiders. So Paul Prager and team are very sensitive to any dilution. Bitfarms and really most of the miners that have used the convert this year, they've attempted to prevent that with something known as a capped call transaction. So essentially, up until the cap price, the company will use some of the proceeds from the convertible note to go out and purchase enough call options to actually offset those shares. So if the investors decide to convert into shares, they then have enough call options to buy those shares off the market and essentially net out to zero. Now, interesting here, the cap price again was based off trading earlier in the week and came in at 1188. So essentially no dilution up until that point. And again, compared to today's share price in the $5 range, this looks very beneficial to Bitfarms shareholders.
Yeah, and that $11.88 represented a premium of approximately 125% to that share price of $5.28, which was reported on October the 16th, so yesterday. So again, looks really, really positive for Bitfarms, gives them a significant amount of capital. Bear in mind, they've also got that project capital that they've converted from Macquarie as well. So they're building up a really nice capital position. Now, they're looking to probably start something on a smaller scale at Panther Creek there. Remember, Ben on the podcast was saying, it might be something like a 50 megawatt type of co-location deal. They have got more power than that, but they're not looking out there to run away and say it's going to be 500 megawatts or a gigawatt. They're looking to do small scale. They've also got the Washington site, which is probably further down the road in terms of, contract, for that particular site there. And they have a number of other sites there as well. So building up that nice capital there with also the Bitcoin on the balance sheet, which probably takes them, the best part to $1 billion in terms of capital that they have available at their use now. So puts them in a strong position. And, when you look back at last year or the last 18 months that Bitfarms has had, this has really come out, at the right time. They've gone through so much in terms of that buyout potential there from Riot, which lasted, a long time before Riot decided to, look in another direction and sell, the majority of their shares. But for that 12 months, it really put a cloud over Bitfarms and over Riot as well, to be honest with you. Both companies didn't fare very well out of this and probably cost each company quite a considerable amount. But this is positive news now. They've got control of their destiny, and it looks like they're going to take it with both hands moving forward.
Yeah, that was a kind of a thorn in the side of Ben and Bitfarms for a while. Interesting, we saw Ben present at the H.C. Wainwright conference, and it was really that catalyst, I think, that started this run. We saw some big investors really show interest, and we've got a clip we'll show from Ben next, talking about the fact that potentially being first mover in this megawatt data center space isn't necessarily all it's cracked up to be, and the fact that waiting and every megawatt that's taken off the market in these deals makes the value of remaining megawatts even higher. So I'll play you that clip, then we can move into the next miner.
So what's going to happen here is that you don't actually want to lock yourself into a term sheet with a hyperscaler today. What you want to do is you want to execute. You want to bring that closer and closer and closer to the point where the customers are getting increasingly more desperate and they're willing to pay increasingly higher prices. That's how you lock in higher margins and higher revenues. And so this is exactly aligned with how we view the market.
So as you can see there, a great example of how these miners are coming into the HPC AI game, and really the economics are looking better and better by the month here. So we've talked about debt, we've talked about convertible notes, ATMs we saw a lot last year. IREN was a great example of that, using them to grow. CleanSpark, they've cooled off a little bit, but we will say, based on some of the share price we've seen this week, we're actually hoping there's a few miners out there that were using the ATM. Maybe talk about that a little bit, Anthony, and why it's a benefit to use ATM at higher share price.
Oh, yeah, and as I've alluded to earlier, it's, if you want to sell shares when your share price is a dollar, and to raise 100 million in capital, you've got to sell 100 million shares. And we've seen some of the smaller miners have to, sell a lot of shares to get a small amount of capital. But as the share price rises, if these miners take advantage of that rise and use the key timing to sell shares on the market, the ATM gives them the opportunity to literally, they can sell shares on a daily basis, and it's within their control. It's not like they're giving other people control. They control the destiny of those shares in the ATM. They can tell the investment banks that they want to, this is a time now to raise some capital there. And if you think about, and I've talked incessantly on a number of podcasts about the volumes, if a company wants to sell 2 million shares of an ATM and their trading volume for the day is 150 million shares, no one's going to know the ATM was being used at all, because it's, the market's looking for spikes in changes there. But, if you like the likes of Bitfarms, they've been, having 100 million shares a day traded for the last 3 or 4 weeks. In fact, probably since Ben made that announcement at the HC Wainwright conference, because it seems to have gone in an absolute different direction. Everything's really positive now. The share price rallied above, well above $6 range there. Yes, it's pulled back, but all the shares have pulled back, and I expect that share to sort of like gather ground and get back to the above $6 range in the not too distant future, as long as the Bitcoin price starts to recover as well, because that seems to be the correlation at the moment that miners are facing. Even though we think, the decoupling to HPC gives them another opportunity other than Bitcoin to rely on market valuation. But you look at the likes of what IREN have done to get to where they are now. Back in April, when the share price was $5 and the company was valued, at just under $1 billion, and today it's $16 billion company, because they've used that ATM exceedingly well. But now they've used it a lot, and they've now got them taken out to $1 billion convertible note price.
Yeah, and just to finish off your example there, if you need $100 million at a dollar each, you got to sell 100 million shares. If you're at $5, like we saw the move in Bitfarms, only 20 million shares worth of dilution. So you can see how the timing there is a major component.
Yeah.
Now, you just alluded to IREN nailing the timing on ATM. They also nailed the timing on this convertible. So yeah, $1 billion right at the top of the chart here in terms of share price, 0%. They've got the capped call in there. It limits dilution up into the $120 range. The conversion price, I think, was north of $85. This across the board, I think, is a textbook example of how to run a convertible note.
Yeah, absolutely. And again, this gives them, a significant amount of capital now to determine, their own destiny. I mean, they're one of the few miners that, aren't positively looking to have that co-location deal. They believe they can, get a co-location deal if they wish, but they also believe they can deliver the service themselves, and they're proving that at the Prince George facilities up in Canada. So, growing that GPU size there significantly, and then looking to get, I think, like 100,000 GPUs in place in the not too distant future. And then the focus then will be down on Texas, which is the remaining areas. They have 2 facilities at the Childress site, Horizon 1 and Horizon 2, two 50 megawatt facilities there. And then they've got this 2 gigawatt site, Sweetwater 1 and 2. Sweetwater 1 comes online April next year, Sweetwater 2 in 2027. So lots of optimism around IREN delivering it there. I'd like to see a co-location partner, certainly at Sweetwater. I mean, 2 gigawatts is a significant amount of site there to start putting your own GPUs in, because like mining machines, they're expensive. But unlike mining machines, they're far more expensive, and you have to raise significant amounts. I mean, $1 billion just would not get you enough machines to fill probably Horizon 1. And so, if you start looking at the likes of Sweetwater, you're into the hundreds of billions of dollars to raise for that particular site. Now they may be in a position to do that, but it's a challenge on their own. If you can get a co-location partner, that you tend to de-risk a lot of that as well, because I still believe there's a little bit of uncertainty as to the length of time for some of these machines. And like mining machines, as soon as the next more efficient machine comes to the market, everyone chases the more efficient machine. And that might be the same in the GPU race. We've seen the H100s, H200s, the Blackwells, the 300s. There seems to be 7 or 8 different GPU machines out there, equally, being more efficient than the last one. And so it's a real sort of like challenge to know which machine you should buy and then stick with for the foreseeable future. And how long are these machines going to last? Nobody can really tell at the moment, because if you look at those that are using these GPUs, they've only been using them for a maximum of 18 months. They've got no lifespan to really say, well, the last 3, 4, or 5 years, because they haven't used them long enough to get that data. And so this is the challenge I find. And I think, take that risk out of your out of the equation, provide the facility, provide the power, and all the requirements for HPC, but let the co-location partner bring in the GPUs.
Yeah, it's a great point, and we've talked about that a lot, these different strategies. Just to put it in context, we talk about these gigawatt sites, Sweetwater, 2 gigawatts. If you look on Google, that's enough to power 750,000 average households for their energy needs. So a gigawatt is essentially a city's worth of power in many cases. So just to put it in reference, when you look at some of these schematics, you look at the amount of land, you say, why do they need hundreds of acres? This is a significant amount of power going into these data centers. So 2 years ago on the channel, people said Bitcoin mining is a dying business. You're not going to make money. Then they shifted into HPC. They said Bitcoin miners can't do HPC. That'll never work. Then we saw the contracts. Then they said, well, you can't do HPC in Texas. It won't work in that climate. Now we've seen that. Then they said, well, there's no way your small companies are going to be able to finance this. Now they've done that too. So the Bitcoin miners are really making waves here. Now we talk about the scale, the amount of money that these facilities require. This is a great example from Bitdeer. Take a look at their new seal miner repair facility. So this is for one company, for one type of ASIC, and just a repair facility. We've got a great video here as well, but Anthony, you can see the scale. This stuff is not cheap, and these companies are becoming major infrastructure players.
Absolutely. And remember, Bitdeer are the only mining company out there that effectively are fully integrated. They're building their own machines and delivering them already. They've already delivered over 30 exahash of the SealMiner A2 machines across their sites, and they're about to start producing the SealMiner A3, which is far more efficient. And we'll see those, if they're not sold, going to other sites as well, because they're going to be at 40 exahash by the end of October. And there's no doubt in my mind they potentially will have the biggest hash rate of all the miners, because they have the sites and they're developing the sites. And the good thing about Bitdeer is they're developing the sites with a focus on having co-location, having Bitcoin mining. So there's not, they've not turned around and said, we're stopping Bitcoin mining. Why would you if you produce the machines? They can produce machines far cheaper, and the return on investment of those machines is far less required than going out to, say, a supplier and buying them off the shelf out of the market there. If they're not selling to customers, they're selling them to keep them themselves at a cost basis. And when we've had conversations with Bitdeer, they can make these machines significantly cheaper than what the prices are from competitors are charging for similar types of efficiency around the world.
Well, and you start to model that out, you think maybe an ASIC has a 2-year payback period. If you're only paying cost or the parts to build your own, maybe that goes
Yeah.
down to 9 months or whatever the case is. So you see that those economics really shift dramatically. Now let's watch this video. It's a 2-minute video talking about the repair facility, and we'll show you guys exactly what we mean here.
Here in Rockdale, Texas, where innovation meets infrastructure, Bitdeer is opening a new chapter, one that puts customers first. With the launch of our new official Seal Miner Repair Center, we're bringing faster, smarter support directly to the mining community. Welcome to the Bitdeer official Seal Miner Repair Center, now open in Texas. As a world-leading provider of mining solutions, our deep operational knowledge and global infrastructure form the backbone of our Texas Repair Center, specifically built to support the Seal Miner product line.
Our repair center isn't just a service desk. It's a product of years of operational experience. And it's that operational experience that drives our approach to customer support.
We're not just fixing machines, we're empowering customers. From case studies to tutorials, we're sharing insights that turn technical issues into learning moments. So every Seal Miner owner becomes more confident, informed, and prepared, making the Seal Miner experience better.
We use every repair to learn more about the boards shared amongst the technicians so the technicians can be more efficient in repairs. We also share the information we learn in the repairs with our customers so they can be just as confident in the miners as we are.
With in-house support backed by the same team powering our global operations, you know your hardware is in the most capable hands.
So at Bitdeer, we manufacture our own seal miner. We run and maintain those globally at all of our facilities, and we also repair them in our repair centers. So that should give the customer confidence in using us.
Bitdeer is proud to announce the launch of our first official manufacturer-managed Seal Miner Repair Center. This is just the beginning. Global expansion is on the horizon. From Texas to the world, welcome to the future of crypto mine support.
Now that's an awesome video, some great visuals, but the line that stuck with me is we build our own rigs, we run our own rigs, we distribute our own rigs around the world, we repair our own rigs. So obviously people should have trust in this Seal Miner platform. Time will tell there. We talked about the total addressable market, that ambitious 30% of market share. But we've seen a lot of people in the influencer space really coming onto this Bitdeer story for exactly those reasons you just talked about, Anthony, really controlling their own destiny and having that flexibility on a global scale.
Absolutely. And one thing of interest is in 3 weeks' time, we're going to be at that site firsthand to see what they're actually doing there. And we'll be probably doing a podcast either from the site or certainly from the location, to get the information back to you guys there, what we've witnessed and how we're seeing things progress. Remember, that Rockdale facility is an enormous facility there. It's close to 700 megawatts, and it's within a cricket ball throw of another site. Although we're not going to that one, the right platforms Rockdale facility is literally the next site down the road. We're going to go to the Corsicana site and see what's happening there, because that site is where they've announced they're going to use that 600 megawatts of spare capacity towards HPC. But it's going to be a great touring. We're going to see a lot of different facilities, but I'm looking forward to the Bitdeer facility, especially now we're seeing this Seal Miner repair center there, and get some first-hand updates of how performance of some of these Seal Miner machines really are.
That's right, Anthony. We're loading up the station wagon. You, myself, Kevin, Didi, we're going to go around, tour some of these facilities in the second week, I think the 10th of November. So that's going to be an excellent trip, and we'll be sure to get some behind the scenes video footage, commentary for you guys on the podcast. So we've talked a lot in this episode about financing. We've looked at debt. We've looked at convertible notes. We've talked about ATM. Obviously, we've seen the companies selling Bitcoin to finance operations. So let us know in the comment section below which of these levers you prefer most, or if they're time-based, I guess where we're at in the cycle, along with how you're feeling about this recent pullback in the miners. The final piece we just wanted to throw in for you, the Core Scientific vote now just 11 days away. A quick update on your parity table here.
Yeah, 11 days to go, and we're looking keenly at that value of that deal as at the 7th of July, which suggested the core scientific share price had a value of $20.40. The deal itself, $9 billion. The share price today is $18.75, so not a million miles away from that value price there. But the indicative price today, based on the CoreWeave share price, because that's what will happen if the deal goes through on the 28th, that we value the CoreWeave share price, not the CoreWeave share price on the day of the 7th of July, which is significantly higher. It's $133 today. It was $165 back on the 7th of July. That gives an indicative core scientific share price of only $16.46. Now, we spoke about this many times in the last few weeks as we've been covering this on a regular basis to give shareholders an update of where the pricing is. And you can bet your bottom dollar that situation awareness are fully aware of the situation, because they've got 9.4% of Core Scientific. They're one of the biggest shareholders in the company now. That's just been revealed on a 13F document, an SEC document in recent days, actually, and along with 2Cs, who were the company that came out to say not to vote this through or to vote the compensation package for directors because they believe it wasn't in the interest of shareholders. So it's going to be interesting times. I've already voted. I'm looking at the value of the contract there, and if you look at the price, in value in terms of what IREN shareholders have seen their price go up, and they haven't even got a contract. Core Scientific have got the biggest contract on the market out there at the moment, 590, and they're sitting today with a valuation of just under $6 billion. For me, it's just like it should be probably maybe double that in terms of valuation, and that's only because they've already started delivering some of that 590 megawatts. Once they really get into it next year, where they start delivering the majority of it, I think the valuation should be even higher than what it is then. So I think maybe shareholders are thinking, there's more to this than the $9 billion that CoreWeave are offering there. Do that contract for 12 years, do the extensions for a further 10 years, and start making massive inroads into that $850 million of revenue they receive every year.
Yeah, a little bit of a head scratcher, as we say there, but really a good reminder. We've seen all of these miners we talk about really riding highs and riding lows throughout the past 2 years. So it's interesting to see how the dynamics change. And that's why we always say to zoom out, look at the longer term picture. We'll end on the heat map here. This again was taken in early trading. There was only one company up at the time. It looks like the market is softening a bit. Maybe the miners are starting to rally into the end of the trading week here. We know Fridays are obviously option day as well, so a little bit of odd trading. But the general point here, you guys, if you zoom out, the day-to-day volatility really doesn't matter. If you look at the 1 month, the 1 year, this is the sector you want to be in. Power is in demand. There's a lot going on in this space. Companies are now raising the money they need to execute on these visions or goals, and it's just really a matter of time until we see these plans come to fruition.
Absolutely. And actually, if you look at today's red, and it's red across the board, with the exception of Riot, they're up 1%. However, Riot, from a 5-day perspective, are down 6%, and not many miners are down on a 5-day change. So if you look at the 5-day change, actually, the average share price is up 8%. If you go to the 1 month change, the average share price increase is over 50%. So even though we've had a significant pullback in the last 2 days, 2 days of significant red, shares are still massively up in the last month for the majority. And you look at Soluna, 285% in the last month. Great for those people that managed to jump onto that share price. I mean, but the amount of updates they've brought out in the last 6 weeks, it's understandable, because they just seem to be gaining momentum in terms of hosting partners, in terms of raising capital, in terms of showing you that they're going to deliver their projects, not just one at a time, but having multiple projects being delivered at the same time, something they haven't done before because they haven't had the capital. And we talked about Soluna 2-3 months ago when they were worth, about $8 or $9 million. Today, $115 million. That's a significant increase there. The share price reflects it, and great to see the team doing well, delivering what they've been telling shareholders they'll deliver. They've been meeting it.
That's exactly right. So we end the week here. A little bit of a sour note in the red. We've talked about volatility for the past 24 months. You're seeing it in front of your eyes right now. Overall, things looking very good for the mining, HPC, AI sector. But as they say, 2 steps forward, 1 step back in the game of stocks. So with that being said, have a great weekend, you guys. Hopefully you're still up on the week. Hit the like button. Feel free to subscribe. We'll see you back here on Monday.